S&P 500 pierces all-time highs on bearish divergence, weakening breadth, and declining volume. Could this be a repeat of the 2000 double top or the 2007 double top? This is technical analysis of the stock market's update and forecast for the week of August 24th, 2020. Hello traders, I'm Richard Graham. We're taking a look at the S&P 500 and this broadening megaphone pattern that started in early 2018. We hit this lower trend line again on Christmas Eve of 2018 and then on the March lows of 2020. And here we are at the top at this double top that we barely pierced. And we're basically sitting at those all-time highs right now. Some analysts say we pierced it, and so, hey, we're going to go up from here. But it's a little too early to tell, because if we look back at the double tops that we had in 2000 and 2008, neither one of the double tops were exactly even. In fact, on one of them, it went a little bit higher. One was a little bit lower. One was a little bit higher. But they ultimately resulted in a bear market. Let's start by taking a look at the double top that we had in the year 2000. Looks like we peaked here on this day, March 24th of 2000. And if we draw this trend line, we can put it up here at the top of this wick, or we can put it down to the body of these candles. But we did have a double top, and eventually we came back on September 1st and tapped it again, and then went down from there. So you can see this double top actually is a little bit lower, didn't quite make it as high as the March 24th highs, but then we went down from there, and you know the rest of the story. In 2007, we had a similar double top situation that started here in July, came back and retested that top in October. We actually pierced above it for 2 or 3 days, and we couldn't stay above it, and then we went down from there, and you know the rest is history. And we had the March lows in 2009. So the question is, are we going to have the same type of situation this time, where we pierce above it a little bit and then it's down from there, and then we hit the bottom of this megaphone pattern, which could be below 2100? So if that happens, here's where we have the support. Right where there was previous resistance in 2015, now would act as support right around that level of 2100. Of course, we're getting ahead of ourselves. That's just one scenario. What could actually happen is we could actually come up, pierce through these all-time highs, go up and hit this upward trend line, come back and retest the all-time high level, and then move up from there. So in the short term, we're going to find resistance probably right around the 3550 level. A couple of things I want to point out as we've gotten higher in the market and closer to these all-time highs, the volume down here has been declining. The relative strength index is actually showing bearish divergence. If we compare this high here with this high, price is going higher, but the relative strength index is actually heading lower. The MACD is also showing bearish divergence. When you compare this high on June 8th with the high that we had a couple of days ago, we have a lower high on the MACD, which is considered bearish as well. Taking a look at the 4-hour chart, I think if we do start to sell off, we do have a few areas of support. We have a couple of gaps that we could fill, come down to the 3275 level. Also, the top of this island reversal from June 8th, another area right around 3200. If we get below that, we have more support that we can put in right about here, where we've had multiple touches in the past at 3000. Let's see what Fibonacci has to say. Take this swing low, March 23rd, bring it all the way up to the all-time highs, and we see the 50% retracement level right here at this major level of support at about 2800. The 61.8% retracement level would bring us back to this important area of 2650. On the upside, the Fibonacci extension on the 50% level would take us up to 4000 on the SPX. Here's GLD. This is the ETF fund for gold. We're entering some sort of consolidation. As long as we stay above this level, I would remain bullish. We could come down to this other trend line here for support before we resume higher. SLV recovered a lot of its losses, and we're also consolidating. At this time, I'm still bullish on gold and silver. We could break out on SLV from this triangle and have a measured move that's equal to this original move, which would take us all the way up to about 32, the next resistance level I see on SLV silver. The U.S. 10-year interest rate is still going higher. Looks like we're consolidating. We could actually move higher from here. Interest rates are inverse to bonds, so higher interest rates could mean lower bond prices. However, we're still in this long-term downward trend in interest rates. Major cap-weighted stocks like Apple, here we go, are still driving this market higher. A lot of stocks are not participating in this rally, but Apple sure is. Look at this big 5% move just on Friday alone. Amazon is still looking bullish. However, we do have some line of resistance here. Kind of coincides with the resistance we're seeing on the S&P 500. We have the same type of situation going on with Microsoft. We're still in an uptrend. However, we're hitting this resistance. Here's Google, same type of situation, above the upward sloping trend line, hitting a double top of resistance. Can we break through it? All of these stocks are driving the market right now. We're either going to break up or we're going to break down. It's going to be important to the direction of the overall market where these stocks go. Same thing with Facebook. Here we are hitting some resistance, but we're still above the upward sloping trend line. Which way is it going to break? Going to be important for the market. Tesla, as I said before, once we break out of this triangle, we could have a measured move similar to the one we had before. I'd put the target right at about 2,200. Bitcoin, not much change from last week. Here's the daily chart, still bullish if we remain above 10,400. The VIX futures are still in contango, and that's a bullish indicator for the stock market. This week, couple of things to keep our eye on as we're trading. 10 o'clock Eastern time on Tuesday, we have the consumer confidence and new home sales. And then on Wednesday, we have the core durable goods orders and crude oil inventories. Thursday, 8:30 Eastern, GDP, initial jobless claims. Fed Chair Powell speaks, and we'll also have pending home sales. So Thursday is going to be the important day to look at this week. All right, traders, so that's the picture. Make sure you like, subscribe, hit the notifications bell. We're at a crossroads right now. Is this going to be a double top? Deja vu all over again like 2000, 2007, heading into a new bear market? Or do we finally bust through these levels and head higher? We're going to find out real soon. Have fun trading this week. See you next time.